Good evening and welcome to this session. So it's nice to be back here again with you all. And just give me 1 minute to share my PowerPoint. See, in the last class, we were discussing corporate social responsibility, and I think it's one or two more sections needed to be done, which I could not complete. So today we will do that. We covered NAFRA and all. We just started CSR, if I remember right. We started CSR, but we could not complete it. So anyway, good evening to Shagufta, Soumya, Tanu, and others who are greeting me. And so you can either put up your queries on the chat box or you can do it in the query pad, which is also available. Either way is okay for me. Both, I'm looking at both. But the chat box, I will not look continuously. Only when I reach a certain point in the lecture, I will look at the chat box. So just to quickly go through CSR, we saw that only certain categories of company have to appoint a CSR committee. Only certain committees, certain type of companies have to have CSR committee. So this is very important. You should try to remember this. Which company will have to have CSR committee? Okay. So what I would normally do, my method. Okay, I'm not saying that you should use the same method or that is the only correct method, etc. But usually, I will not only rely on institute material or PowerPoint. Of course, that will be the basis of my preparation. But in addition to that, I would have a notebook, right? I would create a notebook. I'll have a notebook like this, or maybe a smaller notebook like this, in which I will make notes. So detailed notes. As I'm reading the subject, I wouldn't copy the complete institute material or content. What is important? I will note it in this notebook. That one thing is when I write, my mind remembers better. Some people ask, how do you remember? I say it's very simple. Write it. Because ultimately, in the exam, you have to write. Even if you have some multiple choice, bulk of the exam is only writing. Therefore, practice writing. Ideally, try to use a fountain pen. Try to use a fountain pen. Okay. If you are uncomfortable with a fountain pen, at least use a gel pen. Use a good gel pen. Okay, which is fluidly flowing, and write somewhat, not too thick, somewhat thick, maybe 7.07, and practice with a single pen, either a Uniball, or this is called a Wrightcraft roller pen, almost similar to the Uniball. Whatever, the Uniball pens are the best. If you have a Uniball pen, nothing like it. You can use that. Why I'm telling this now, you might feel uncomfortable when I'm telling this, but this is also important. Knowing the subject is one thing. Communicating the knowledge in a nicely presented way so that the examiner is able to get a good experience is also part of getting high marks in the exam. So in case you are not good at it, you have to practice it. So coming back to the point, you have a notebook wherein you note on these type of important things. What are the companies required to constitute CSR committee? You can even do one more thing. There are many such similar, limits being prescribed. For example, small company, there's a limit, paid up capital. Most of the time you'll have paid up capital, net worth, turnover or profit, or debt. In some cases, debt. Which are the companies for which NAFRA is applicable? Which are the companies for which Ind AS is applicable? Which are the companies for which compulsory internal audit? So instead of doing it in a separate pages, you have a single sheet with column. And for each kind of situation, you write, so that it becomes a single sheet where we can do it. In fact, in those days, our past president of our institute, CA R. Bhupati, who used to teach income tax. I'm talking about the long ago, 90s, rather than 80s, late 80s, when I qualified. And of course, later on also R. Bhupati was teaching. So R. Bhupati used to, for capital gains, he used to give a columnar comparison, right from 54 to 54F, 54G. He'll give a columnar comparison. It used to be very useful for exam preparation. So my suggestion is you should do that. You should have this. So that way you'll remember it also. And last advantage, day before the exam, I'm feeling a little nervous. I want to be sure that I know the important things that I have not forgotten. This notebook becomes my go-to resource. I mean, not this notebook. In this notebook, see, when I was studying astrology during the Corona period, my entire astrology notes, what all important, I have noted here. Okay, so that this becomes my go-to. Whenever somebody gives a horoscope, I just quickly run through this cheat sheet. So then only I go to the horoscope itself. So what I'm trying to tell you, my dear friends, is everything is a kind of education. Whether it's company law or astrology or psychology or whatever. Okay, when you study, there's a method of studying. And that method is notes. Take notes, neat notes, or if there are two types of notes. Notes taken during the lecture are very important. They are rough notes. Then fair notes, which are made by neat manner in the Statutory. That fair notes become our preparation source also. So this type of effort is English, rather than lying back and expecting the institution or the faculty to give me all the resources, I create the resources for myself. Okay, so my humble request, please take notes if you want, because these PowerPoint presentations will be uploaded, no problem. It will be with you. That itself could be a very good last minute preparation. But if you are also able to create the way I have done notes, your ability to remember will improve. Okay, it's my humble request to you, my humble suggestion, do not take me other ways that I'm telling all these things. Okay, so net worth of 500 crore or more, turnover 1,000 crore or more, net profit 5 crore. Very important during the immediately preceding financial year. So we have to look at the P&L balance sheet of 31st March of the previous year. Okay, any changes after 31st March will not be relevant to decide. Suppose I have to find out whether I have to contribute to the CSR fund for 25-26. Then I should see 25 March figure. Suppose the turnover is more during current year, not relevant for current year decision. I have to see the previous year turnover. Is it more than 1,000 crore? Net worth, is it more than 500 crore? Net profit, more than 5 crore. Net worth definition was also given. P&L was also given. Two things have to be excluded. Okay. Profit from an overseas branch and dividend from a company, from other company, which is covered under this section and which is complying. Net worth definition, please try to remember. We already saw this, so I don't want to waste your time on this. So, very importantly, what is the percentage to be transferred? The board of every company required to form CSR committee shall ensure that the company spends in every financial year at least 2% of the average net profits of 3 immediately preceding financial years. Okay, 2% of the average net profits of 3 immediately preceding financial years. In case we already saw all this, the administrative overheads, that is not connected with the CSR expense. For the purpose of disbursing, we need to hire people. Suppose the amount involved is huge, then you have to have people to monitor their salary, etc., etc. That total administrative overhead should not exceed 5% of the CSR expenditure. Suppose Tata Motors, just example, ABC Limited, 200 crore is the average profits of immediately 200. On that 2%. 200 crores, 1% is 2 crore, 2% is 4 crore. So 4 crore they have to spend. Am I correct? 4 crore, 2%. Now 4 crores, if I want to spend out of that 4 crore, about 20 lakhs can be used for administrative expenses on an annual basis, 5%. Okay. It shall not exceed this amount. So I think we already saw this, Tirupati Limited. Okay. Now, you have to take the average of the immediately preceding 3 financial years. Though they have given 5, you have to take only the immediately preceding 3. 50, 70, 30, immediately preceding 3. Correct? Okay. And total divide, so you get 50, 2% is 1. Okay. Right. One crore can be spent. Out of that 1 crore, 20 lakhs only for, 5 lakhs only for administrative. Suppose the board does not spend, then it has to disclose it in the report. But for ongoing projects, we can keep it for 3 years. Okay. Right? If it's not an ongoing project, then it has to be transferred to a fund specified in Schedule 7. There is a government monitored fund which will spend. So if you are unable to spend it on your own, government says, give it to me, I'll spend it for you. Okay. We will give it to a fund which is specified in Schedule 7. Okay. Schedule 7, we already saw. Okay. These are the items that are covered in Schedule 7. So any fund which is set up under Schedule 7, okay, contribution to the Prime Minister's National Relief Fund, you contribute. You give it to them. If you are not able to spend it, spend it. Give it to Prime Minister's Relief Fund. Prime Minister knows how to spend it. Why are you wasting your time? Give it to him. If you are unable to spend it, give it to him. Okay. Unless it is an ongoing project, in which case you need not. Suppose that particular CSR activity involves some revenue also. For example, your CSR activity is helping the native tribes of Nagaland to develop their tribal knowledge. And you have built a outlet in Kolkata for them. So whenever they develop it, you help them to do it, commercial production. You also help the logistics. You set up a network in West Bengal, Bihar, Odisha. You see to it that there are high-profile showrooms where people come and buy. So, and that proceeds will be again given back to the tribals. So initially also you fund it. Your CSR funding is you help them to develop the infrastructure, the capacity building. So it's a good project, beautiful. 2-3 companies have done wonderfully on that. What the project I'm now describing is a wonderful project. It has been done. It's not, I'm not telling casually. It has been done very well. It's not by government, through CSR. Okay. And of course, helped by government also, but basically CSR. So what I'm trying to say is that activity could generate some revenue also, in which case it should be plowed back into the same project. In case you are not plowing it back, it should be transferred to the unspent CSR account and transferred to the fund within a period of 6 months from the expiry of the financial year. Got it? So surplus cannot be taken into your business. No. Suppose you have made excess expenditure, more than what is required. Then you can set off and carry forward and set off of losses. That excess amount can be set off against the requirement to spend under 135(5) up to the immediate succeeding 3 financial years. Provided you cannot carry forward surplus. Suppose you have surplus in the CSR activity, that has to be either plowed back or transferred. But excess spent by you over and above 2% can be carried forward and settled. And the board of the company should pass a resolution to that effect. Okay. So Mayre Limited is a listed company having a turnover of 1,200 crores during the financial year 21-22. The CSR, so they formed a CSR committee and recommended the CSR project. The company finalized the CSR project, which required funds at 5% of average net profit for at least 3 financial years. Will such excess be counted in subsequent financial years? Yes. You just have to answer this, that's all. The answer is just this slide. You have to write it, that's all. 2 or 3 marks straight away. So excess amount may be set off to immediate succeeding 3 financial years, subject to the conditions which are mentioned here. Okay. That's all. This slide. Okay. Capital expenditure. No. See, sometimes CSR need not necessarily be for running something. It could be creation of a capital asset also. I gave you my example in a school where economically weaker section of society, children are studying. We have built a toilet block. It's a permanent structure. It is an asset. Are you able to understand? So my Rotary Club and the CSR funding from, I think, Shivnada Group came and gave somebody. I'm really not aware. I think Shivnada Group gave. So that money has come and we have used it for constructing the toilet block. Now, the CSR funding has come now. That should be very clear. You can create this, but that asset cannot belong to the company. It should not be disclosed in the company balance sheet. It should be held by a Section 8 company or a registered public trust or a registered society. So, of course, this building is now forming part of the charitable trust, which is running the school. So this toilet block is now included in the buildings of that trust. Okay. So the benefit, or it can be held by the beneficiaries themselves or a public authority. Okay. So see, most of the time, companies cannot directly get in and do CSR. A, because they do not have the expertise, and B, they simply do not have the time. Therefore, it is quite normal to hire NGOs and to use them for this purpose, or partner with internationally known organization like Rotary Club, and try to do with them, partner with them is normal. Nothing wrong in that. In fact, Rotary International recommends CSR funding. So they request corporates to give to them, which they will in turn push it to a known project, which the company can claim as its CSR. But if you're going to create any capital asset, then that asset has to be handed over to the beneficiaries or to a public authority or to a trust, Section 8 company or a society, right? So this is the condition. You can't create some capital asset, maybe allow it to be used by some people for charitable, but then show it in your balance sheet. No. Okay. Any capital asset created by the company prior to the commencement of these rules should either be not in the company's balance sheet. If it is in the company's balance sheet, within 180 days, it should be transferred. Maximum another 90 days extension possible. In case there is some amount remaining unspent on any ongoing project. See, if it is an annual amount of CSR, you are supposed to spend CSR 2%. You have not spent it. Then that year end, you have to transfer it within 6 months from the expiry of the financial year. Straight away. Got it? But if it's an ongoing project, you got 3 years. So, or the duration of the project, whatever. So that you have to wait 30 days from the end of the financial year in which you should have completed it. To a special account. Suppose there is an ongoing project, 2 years project. So 2 years later, you should have spent it fully. Now, at the end of the second year, you have not spent it. Then 30 days from the end of the financial year, you transfer to a special account. Okay. It should be called unspent CSR account. That amount can be spent by the company in pursuance of its obligations towards CSR within a period of 3 financial years from the date of the transfer. not in that project, in some other activity. Got it? But if it's not so spent, boss, I wanted to start a ongoing project. I pumped in some money, but it could not happen. But that money was kept aside. That has not been spent. So I'm supposed to spend it within the next 2 years. I have not spent it. Then you transfer it within 30 days from the end of the financial year to a special account. In that account, you keep it. And from that account, you can spend it for another 3 years. You can use for some other purpose, any purpose. For the CSR purpose, you can use it. Okay? CSR. Okay. The idea is you don't lose it immediately. You get to keep it for at least another 3 years. Suppose 3 years also you have not spent it. For 3 years, you kept that money, didn't spend it. Then it should be transferred to the fund specified in Schedule 7 within a period of 30 days from the date of completion of the third financial year. So my project is 3 years. So I'm given till 3 years, I have not spent it. Then actually, when you're giving an ongoing project, you should also tell us how much you're going to spend in first year, second year, third year. So first year, you spend amount spent, unspent, you have to think. But the idea of an ongoing project is that you are allowed to do this. In an ongoing project, you are allowed to do it. You can push it. You have time to spend it. Okay. Right? So in an ongoing project, you can take time to spend. But in case you are not able to spend it within the time you prescribe, maximum 3 years, then at the end of that third year, you transfer it. Another 3 years we give you, take it. You try to spend. That 3 years also you are not spent. Then the second, third year, 3 years, at the end of that, within 30 days, you have to transfer it to a fund. Okay. Fairly reasonable provisions. Am I correct? Now, until the fund is specified, the unspent can be transferred to any fund included in Schedule 7. That's why I showed you. As of now, no fund has been given. In which case, please transfer it to Prime Minister Cash or Prime Minister's Relief Fund. Prime Minister knows how to spend all your money. So the board's report of a company covered under these rules should include in an annual report on CSR. When you studied 132, you already saw this. Am I correct? The board director's report. An annual report on CSR containing particulars specified in Annexure 1 or Annexure 2 as applicable. So the CSR details is part of the board report. Compulsory. It has to come in the board report. Right? Also, if your CSR obligation is 10 crore or more in 3 immediately preceding financial years. So it is not 1 year. So your 23 March, 24 March, 25 March. 3 consecutive financial years. 3 immediate preceding financial years. You have been spending more than 10 crores. Then you should also undertake an impact assessment through an independent agency. What is an impact assessment? See, what was the benefit derived from the CSR project? Did they get benefit? If so, how is it? We have to make it as measurable as possible. Usually the measurables would be numbers. So, for example, if your CSR was used for educating children in a particular district, how many children did he educate? And then some qualitative interviews will be taken to see if the benefit has actually been received. In fact, our firm, for about nearly 5 years, we were doing this for a international fund, not as part of CSR, but as part of the regular, sanctioning terms. We had to give an independent report to the foundation that the money has been correctly used. We go remote villages. For this activity, they have traveled all over the country to the remotest forest of India, to the remotest places of India. I have traveled. As I told you, Nagaland, Mokukchung, beyond Woka district, you have to go almost Myanmar border. From that city, you can actually see the Myanmar border. Okay, and almost so many places where in the remote forest, we have to see whether the children have got the benefit, whether the children are actually there, whether they are studying, whether they are actually completed the classes that they say they are completed, whether the family is good, so on and so forth. And of course, sampling. We had to select 100. Initially, I used to go. Then my team used to go. But for the first visits, I used to go personally and to see that everything was going correctly. then we get people who did it. So the point I'm making is impact assessment is when we do this. But here they want it to be done by a independent agency, the firm of chartered accountants or a specialized agency, etc. And which have been and not less than 1 year before undertaking the impact. So you should select projects which have completed not less than 1 year. So one year and above projects, we should do impact assessment. Okay. One of the best impact assessment work I've done here, impact assessment or impact was one of my clients called an NGO called Indian Network for People Living with HIV/AIDS. So the late 90s, almost early 2000s, okay, the entire 2000 to 2010, maximum 2010, I think that was it, 2007 or 8. By then, AIDS was eradicated. The work done by this body was so good on awareness creation that the target audiences, they understood the danger and they understood why they were getting into AIDS, mainly because of hypodermic, not using. They were reusing hypodermic injections, especially drug users. And so what happens? Well, one fellow will be infected. So this guy will take the same syringe and he will use it for his fix. And together with cocaine, he'll get the AIDS also. Of course, sexually transmitted. So that's because of not using condoms. So lorry drivers were the most impacted. So this one, they used to do so much projects in areas like Namakkal and all, where there is a lot of lorry driver traffic, they will go and do it. And slowly the awareness spread and sex workers. So point is, the AIDS was, what was the pandemic situation became controlled and then eradicated. Then only the survivors are being taken care. Now I am informed that again it is coming up. Let us see. So again, this body has to come. Recently, one of the trustees came to meet my colleague to find out whether we are ready to take up the work again because they are reviving again. So, in fact, this is one trust should not be revived, but unfortunately being revived anyway. In fact, friends, NGO finance is by itself a specialized area. To my knowledge, hardly about 100 to 150 chartered accountants in India today are experienced in NGO funding and NGO audit. Chartered accountants. Non-chartered accountants are there. Chartered accountants with knowledge, maximum 150. I have met about 10 or 15 of them as part of these audits and all, but it's a very, very specialized area. Not highly lucrative, but definitely equal to corporate standards. You get the same pay. If it's a good project, they pay you for that. They pay you the going rate for a CA. The impact assessment report shall be placed before the board and shall be annexed to the annual report, etc., etc. So, a company undertaking impact assessment may book the expenditure towards CSR, which shall not exceed 5% of the total CSR expenditure. So, this amount can be, any expenditure is then made for impact assessment will be included in the CSR expenditure to the extent of 5% of the CSR expenditure or 50 lakhs, whichever is less. So this is in addition to your administrative expenses. Okay. This is in addition to your administrative overheads. In addition to that, they will get another 5% for impact assessment, but either it's 5% or 50 lakhs, whichever is less, right? So this should be that composition of the CSR committee should be disclosed, etc., etc. In case there is a default penalty, company twice the amount required to be transferred to the fund. Be very, very careful. If you don't transfer, twice the amount required to be transferred, or 1 crore, whichever is less. Penalty of 1/10 of the amount required to be transferred by the company, or 2 lakhs, whichever is less. Right? So, central government may give special directions, etc., etc. Okay. So this is CSR. At this stage, let me see if any queries are there for CSR, so that we can take that up. In section, if you voluntarily revise board report and financial, can you revise the financial statement? Yeah. I'll come to this point. It's a good question. I'll come to this point. Problem I face with making notes in law is that I fail each point is important. I end up making one. No, don't do that. That is exactly what. No. Idea is be choosy. What you need to take in notes is percentages, limits, and agreed, madam. If you want to take down everything, don't make copy. Use summarize it. So suppose there is a paragraph in the book. Look at what is the core thought in that paragraph, and only write that core thought. Believe me, much of the institute material is like notes, like content. So the entire content. What is the crux of it? Bottom line. Write that alone. I know I'm telling this. Try it out. Only then you will know. Try it out. Next time you write, don't write the whole thing. Read it fully. And then be like, you should be like an editor of a newspaper. This is the sub-editor, the journalist who reports it will write pages and pages of nonsense. He doesn't understand that what he is writing should go into 2 columns in the 3rd page or 4th page. So, or first page if it's so good. So my job is to ensure that it fits there. So when I am reading what he is writing, I'm looking at 2 things. One, what's relevant, what the finally user wants, what the reader wants. So extracting that. But at the same time, I should not tell something which he has not told. This is where, in fact, when you do this type of summarizing now, your ability to handle English also will improve, because you would automatically start being very careful with the way you use words. Just try it out. No, it will be fun. And in the way I am telling, you will end up remembering better, and also have a nice set of notes, which would be a summary of the institute material. Try it out. Then some content is not needed. Yeah, why waste your time? Okay, don't you yourself will know this is not required. That much you should know. See, when I came here, what did I do in the last? Central government will give, etc., etc. See, this clarity you should get. Yeah. Any issue relating to video, audio, etc., please contact Institute Help Desk. In case there is any problem from me, they will call me. In case they are not calling, no need for. I will not be able to relate. This is the last time I will relate to any technical issue. This is the last time I will react to technical issue. Technical issues, please take it up with the service provider or with the institute technical team. Okay. Impact assessment is nothing but, you understood impact assessment. Now, impact assessment is whether the CSR expenditure has been don't confuse 2%. 2% is for the CSR expenditure itself. Yeah. 2% is for the CSR expense itself. 2% of this, so that is different. Here, they are saying if your project is 10 crore or more in the immediately preceding 3 years, then you should undertake impact assessment for projects that are not less than 1 year. Any project, see, if your total CSR spend is 10 crore or more, then you have to get impact assessment done. But you will get impact assessment only for those projects which are having outlay of 1 crore or more and more than 1 year or 1 year or more. Now, for doing impact assessment, you have to spend money. Now, who will do free for you? So that money that you spend cannot exceed 5% of the total CSR. This total CSR expenditure will be 2% of average net profit of the immediately preceding 3 financial years. You will get one amount. Out of that amount, you can spend up to 5% for impact assessment or 50 lakhs, whichever is less. Out of that 2% you are calculating now. In this year, your average 3 years average profit is 40 crores or whatever. When that you calculate 2%, 40 crores may 2%. Okay. What do you get? 80 lakhs. Now that 80 lakhs, you calculate another 5%. 5%, 4 lakhs. That's all. Or 50 lakh, whichever is less. That is 5%. Got it? I hope my arithmetic is correct. So it is restricted. Now, in addition to this 5% on impact assessment, you have one more 5%. That is administrative expenses. Constant, regularly incurred administrative expenses. That is another 5% you can spend. Okay. Are you clear, my dear friend? So what is 2%? What is 5%? You have to be clear. Dhanush, 2% is the expenditure calculation. On the average net profits of the immediately preceding 3 financial years, you calculate 2%. That is the amount which you have to spend on CSR. Okay. So in any year, you can spend administrative expenses up to 5% of this 2%. 5% of 2%. Right? Now, in addition to that, if your CSR spend is more than 10 crore for the immediately preceding 3 financial continuously for 3 years, you are spending more than 10 crore. Then you should also do an impact assessment. Got it? For that, you have to spend money now. That cannot be more than 5% of your CSR expenditure, which is 2% of the average income profit. I have explained it. I hope you have understood it. I cannot explain deeper than this. If you still have doubt, you have to ask a question. You cannot say explain again. You have to ask me, sir, this is correct or that is correct. But now you are clear about what is 2% and what is 5%. Okay. Now there are two 5% here. One 5% is administrative overhead. Normal, every year you can incur up to 5% of the 2% of that you calculate. Another 5% for impact assessment or 50 lakhs, whichever is less. Here they put a monetary ceiling also. Suppose your 5% is going to 1 crore. No, it is restricted to 50 lakhs or 5% of the CSR spend, whichever is lower. Mr. Dhanush, I have taken a little extra effort to explain this again. If you have understood it, like Ms. P did now, can you please confirm that you have understood? Correct. Golti Anil has got it. Okay. Thank you. No, nothing. I'm very happy to explain again because you see, this type of numerical places only they will ask in the exam. Maximum numerical only they will ask. So better be clear about these things. Chalo. Now we move to internal audit, which is no chart. And it depends, ma. Suppose you continuous 3 financial years, you got more than 10 crore. You have to do every year, not every year, every project. Every year you have to do. More than 1 year project, you have to do every year. If you are in that range. Suppose a project is completed 1 year, you have to do impact assessment every year till the project is completed. Once the project is completed, it stops. You do for something else. Okay. See, if you are a large company, then there will be a whole CSR department doing all this. Doing good is also a very difficult activity. Chalo. Now last part of this so that then we can move on to audit. This is fairly simple. But here again, do you notice there are limits? So this is what I'm saying. Have a separate sheet wherein you track all these limits in one place. You design it yourself. On the column, you have like CSR, internal audit, small company, blah, blue, blee, NAFRA, whatever. As and when you revise, you come to this, don't write it in the regular notes only. Have a separate sheet. Prepare it. Okay? So that everything will get summarized in one place. So that what will happen, you'll have a doubt. Every time you need not turn the page, you'll think, hey, 200 for this one or that one. That idiot Srikanth, what did he say? Turnover 1,000 crore, net worth 500 crore, profit 5 crore. No, 5 crore or 10 crore. You get doubt. So every time you cannot go to the book, institute material, open it, or PDF, open it, then scan. Oh, yo. Friends, I'll tell you, sometimes using a book is better because you can go to the page fast. Unless you search and go here, PDF. Whatever. Okay. So the point I'm making is, this will help you to do a quick access. So, my humble suggestion, don't take me otherwise that who are you to tell me all these things. You are here to teach. Teach. Correct. I'm here to teach and I will teach. Okay. So companies required to appoint an internal auditor. That is, internal audit is good. What is an internal audit? This is in addition to a statutory audit. You know that. Statutory auditor's role is different. He is certifying the balance sheet as on 31st March and the profit and loss account for the year ended. He is basically certifying the balance sheet to which the P&L is annexed, to which the notes are annexed. So he is expressing an opinion on a particular day, which is also a criticism that is leveled against the statutory auditor. Most of the time they accuse me of doing a post-mortem of past activities. Absolutely correct. That's exactly my job. I am supposed to do that because how can I keep auditing a company as it is running? Somewhere I have to stop and then only I can do it. So, but suppose on a continuous basis, we need to monitor whether the internal controls are in place, whether the systems and procedures. See, we have a system, we have a SOP, but is that SOP being implemented in the day-to-day affairs of the company? Whether the control mechanisms are actually working, or are there loopholes, or even a potential loophole which could result in a fraud? Now, these are in a statutory audit, yes, we can to an extent sniff a fraud, but an internal auditor can actually discover it, right? Because on a continuous basis, internal audit is a continuous mechanism for verifying whether the checks and balances are actually happening in an organization, right? Now, and it's a very, very important component of risk assessment and mitigation. Internal audit is one extraordinarily important method of risk assessment. Okay, to prevent leakage of revenue, to prevent malfeasance, to prevent fraud, to prevent leak, whatever. So there are methods. Internal audit is an ocean subject by itself. Okay. In fact, there are books written only on internal audit. Maybe in your auditing paper, there is 1 chapter or 3 chapters, but there are books written on internal audit. Okay. There is an institute itself in the United States called the International Institute of Internal Auditors. Institute of Internal Auditors, IAA. And if you qualify the certification examination, you become a CIA, Certified Internal Auditor, CIA, not something else, okay? Centralized Investigation Agency. This is Certified Internal Auditor, CIA, okay? So, but in India, the profession of internal auditor is yet to become recognized as such. But still, the Ministry of Corporate Affairs has started the first step by insisting that certain types of companies should have compulsory internal audits. Which are they? Obviously, one category will be listed company. Even unlisted company, listed company, no lower limit. Every listed company should have compulsory internal audit. Unlisted company, where the paid up share capital of the company is 50 crores or more, paid up share capital. So that's why I said, we have many indicators: net worth, paid up share capital, turnover, profit, borrowings, deposits, like that. So here they are giving 4 indicators. Even one of the indicator is covered, you should have internal audit. First is paid up capital of 50 crore or more. Turnover 200 crores or more. Outstanding loan or borrowing from banks or PFI exceeding 100 crores or more. So the minute you get 100 crore bank funding, there is an element of public interest in your business. So there is a need for an internal auditor. Outstanding deposits of rupees 25 crores or more. Okay? 25 crores. That again is a public interest. So if these are not there and it's an unlisted company, we really don't care. Yeah. Your own money, you do whatever you want, get along with your life. But now that you cross this threshold, we want an internal audit. Okay. Now, bigger question. Would an internal auditor be independent? Answer is he should be. The same rules of independence that are prescribed on a statutory auditor would very well apply to an internal auditor also. Nevertheless, we need to really take that with a bit of on advisement. I'll say why later. Private company, okay? Other than listed company, unlisted public company, private company. Even a private company having turnover of 200 crores or more should have compulsory internal audit. 200 crore turnover. In fact, we have a lot of such companies. 200 crore is not a big amount for Tamil Nadu. Given the size of the businesses that we have in our state, it's not a big deal. 200 crore in that Tamil Nadu, Andhra, Karnataka, it's quite normal. 200 crore is nothing big for us. Okay. Then outstanding loans, borrowings from banks or PFI exceeding 100 crores or more. And forget 200 crores is it's small change in the pocket in Mumbai. 200 crores is just small change in the pocket in a city like Mumbai or Ahmedabad. Forget that. Okay. It's only in other states which are not yet fully developed, where these amounts cannot be seen by businesses. Now, Nataraj Limited is an unlisted public company having paid up share capital of INR 80 crores during the preceding financial year 2021. The turnover of the company was INR 110 crores for the same period. Referring to the provisions, discuss the answer to the following. Okay. So, unlisted public company having paid up share capital of 80 crore, turnover 110 crore. Should they appoint? So, let's see. Unlisted public company, paid up share capital 50 crore. They've got 80 crore. Turnover to 200 crore. They have only 110 crore. But this is or. Note it, Your Honor. This is or. Or means even if one condition is satisfied, it's covered. Whereas if this is and, then all the conditions are to be satisfied simultaneously. No. This is or. So, since the paid up share capital criteria is fulfilled, it is mandatory for the Nataraj Limited. X Limited, a listed company having a paid up share capital of INR 25 crore and turnover of 100 crore. The company secretary has advised the board that X Limited is not required to appoint internal auditor, as the company's paid up share capital and turnover are less than the threshold limit. Do you agree with the advice of the company secretary? What do you agree? On matter of principle, do not agree with company secretary. Most of the time, don't agree. You apply your own mind. You are a professional. You have your own knowledge of company law. Why rely on him or her? You apply your mind, read the section, and answer. Okay? Never blindly trust a company secretary or a cost accountant or anybody. Philip, you are a professional in your own right. Do your own verification. After all, you are an authority on all the subjects. Why are you relying? Don't rely. Okay. Unless it's a specialist activity where you can rely, company law, to an extent, you should not treat it as a specialized activity. It's part of your job. Okay. Don't become so specialized that you will forget company law and don't do that. Yeah. Anybody? So again, you have to go back. See, now suppose you have to write it down and these numbers are there in your mind. How quickly you can answer this question? In a matter of 2 seconds, you will answer it. Paid up share capital 25 crore, turnover 100 crore. Paid up share capital 50 crore, turnover 200 crores. So company secretary is right or wrong? What is the problem here? We are seeing in the wrong category now. This fellow is the listed company, Baba. For listed company, there is no limit. That is why I said don't trust the company secretary. Okay, you form your own opinion. It's a listed company. Irrespective of paid up capital or turnover, it has to, okay, it's applicable only to unlisted public companies. Hence, the advice of the company secretary is not. Okay, got it? Let us see. Correct. Beautifully said. Miss P. Soumya and correct. Jolie Kumari, all of you got the answer. See, I'll tell you. That's all. See, this was an exam question. Okay. See, I have not answered one question raised in the chat on (131). Just give it 2 minutes. In section 139, if you voluntarily revise board report in financial year, can we revise financial statement in that year itself? You can. I really don't see any problem in doing it. Because board report, financial, the prohibition is only for not doing it. You can't revise the financial statement again in that year itself. Okay. And one more thing, board report is not part of financial statement. You already see the definition. You can revise. If you ask me anyway, we will check up the provision and we will try to understand it better. Just finish this off and then who? So Kim Private Limited, same, yeah, again and again. Okay. Like this, they have asked 3 years, they have asked 3 sessions, they have asked. Often repeated question. Who can be internal auditor? Chartered accountant, cost accountant. Kya? They're professional. Kaun hai that professional? Cost accountant, okay, I will agree. Because on operational activities and operational, especially factory related, operations related, you'll find cost accountants have a lot of experiential knowledge which they apply. But I think, see, independence wise, I think chartered accountants are the best because our independence is built into us, especially for our practicing professionals. But the beauty is, internal auditor may or may not be an employee of the company. Many companies, which are huge, they don't have outsourced the internal audit. They rather employ an internal auditor and who will head the internal audit department. And it will be a continuous process. And the internal audit is sort of within the organization, but outside the organization. And ideally, the head of the internal audit department should not report to the CFO. He should, or vice president finance, or director finance. He should report only to the audit committee. If that is there, then independence is assured. If the internal auditor can take any issue to the audit committee, then there's a protection. But if the internal auditor is going to be coming under the director of finance, then to an extent there is an impairment of the independence. That's what I would say. The internal auditor may either be an individual or a partnership firm or a body corporate. In case it's the audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology for conducting the internal audit. See, in my firm, I don't do internal audit. That's something I never, because I am more on the statutory side, but we do have a lot of internal audits which are handled by partners who are good at it, who like it. So on a continuous basis, they will be fantastic. So I hope it was good. And let's quickly look at this 131 thing here. Before we say goodbye to accounts, volunteers. See, revised financial statement or report shall not be prepared or filed more than once in a financial year. Correct. So, if you revise your board's report, you can, in that same year, you can revise financial statement also. Nothing wrong. Okay. Because these are two alag. Financial statement alag hai, board's report alag hai. So, you're going to revise your board's report. In that same financial year, you can revise financial statement also. Answer your question. Okay. But actually, there's a little bit of a confusion here. Actually, I have a doubt here. I have a serious doubt here in this section itself, which is more of English issue. See, revised financial statement shall not be prepared or filed more than once in a financial year, they are telling. Correct. But they are not telling more than once for a financial year. I hope there's a slight point I'm making here. See, I'm revising the financial statement for 24 March. You're able to understand? I'm revising 24 March in 25 March year. Agreed. I can't do any more revision in that year. Okay. If you do one revision, that's it, whichever year. But 24 can be revised in 26 March. I know I'm confusing you, but think about it. The way I'm reading this. But what they are saying is, see, the problem is there. My assumption is that this sentence should read like this. Revised financial statement or report shall not be prepared or filed more than once for a financial year. So in respect of your financial year, you can revise only once. Anytime you can do it within the limits prescribed. Okay. 3 preceding financial years. But unfortunately, more than once in a financial year. So I can do only one revision in one financial year. But the same year can be revised 2 or 3 times also. This is also a meaning that I'm getting. Anyway, but that meaning is only a interpretation. The correct understanding is the financial statement of a financial year can be revised only once. If you are revising board report in 1 year, in the same year, you can revise financial statement also. Okay. But you cannot revise more than once. Okay. But you can do this, you can do that also. If that's it, once you've done it, no more revision. That meaning is also there in this sentence. Okay. So I hope I have answered the question. Every company need not appoint, ma. Only those companies. Thing. Yeah, Anil Ji, you are right. See, scope of CA is, see, the scope is not getting diminished. They are including, but boss, if it really comes to it, believe me, even without including cost accountant, let me assure you, with all my, sort of jingoistic thing about CA being a chartered accountant, superiority and all that, which I will have, ma. I qualified in 1987. I'm now 60 and I've been practicing. I know what I'm talking about. But even with that experience, I'm telling you, there are some jobs that cost accountants can do better. For example, internal audit. Believe me, if you ask me who is a better internal auditor, a self-chartered accountant without experience or a cost accountant with, say, 10 years experience in industry, I would say a cost accountant will be far more suitable. We possess the knowledge, but he possesses the experience. The process experience he knows. Domain experience he has. So this is the comparison. If you take a fresh cost accountant or a fresh chartered accountant, I would say a fresh chartered accountant can hit better. But once this cost accountant has got 10 years of solid industry experience now in cost accounting, this guy is far or she is better, more suitable for internal audit than a simplicity chartered accountant who has done only statutory audit and who, like me, I'm not suitable for internal audit. With all my experience, theoretically, yes, I know how to do it. I can divine a program, etc. But when it comes to it, he'll be better. We have to accept that. But the other professional only, I don't know who it is. I can understand a cost accountant. Both of us are trained. Both of us are numerical abilities. Both of us are good at numbers. Except that we certify balance sheets, they don't. Otherwise, they possess the same knowledge and experience. So, but the other professional, I'm unable to understand who that is and whether such professional will have the qualification, training, knowledge. See, this is where I feel, on the one hand, other professionals are muscling in on our areas like auditing and taxation. Whereas we are giving up our core areas like company law and costing and saying, we won't study, it is not my core area like this. That is where the danger. Okay. I think you should be thorough in company law. Otherwise, you will be having a lot of issues once you become a CFO of a company, especially a listed company, or even in the balance sheet team, lot of company law knowledge will be expected of you. At that time, you cannot say, sir, it was in self-paced mode, sir. No, like that and all, you cannot tell. You should be thorough in 185, 186, 180, every 188, every section you should be thorough. Now we move to the topic called audit and auditors. Before that, any questions are there? Nothing. Yeah. Shagupta has made a statement. Every company appoint internal auditor. This is a very cryptic statement. My answer to her is no. Only those companies which are mentioned have to appoint an internal auditor. Listed company, unlisted public company, private company who satisfy the criteria. Okay, moving on to audit and auditors. One of the topic for the day, which is quite interesting. We have about, so this is contained in chapter 10 of the Companies Act. The Companies Audit and Auditors Rules, 2014 is also there. Okay. Broad overview of the topic. Now, friends, folded arms, if you are following the institute material line by line, like class 5 or class 6 student, you might find that I am jumping a little. I may jump. I may take one section in before, but whereas the institute material very correctly is organized in section order. So if you want to locate a particular topic, if you know the section, you can locate it in the institute material. It is located in section order. But I may not go by that order always. So please do not waste your time, my time asking question where it is. It is there. You attend this class, you go through my lecture. Then aram se you go open the institute material. Section wise it is there. Now go and locate it. It is, remember it is section wise. So once I'm giving the section, you will find there. It won't be exactly in the order in which it may not be. Sometimes I jump. Why I jump or why I juggle? Because then your ability to understand will be improved. That's why. Okay. And you cannot study like that. Law, you cannot study like that. Section 1 to section 100 like. So you have to study in such a way. Which I may not do it also. If I am doing it, please do not waste your time and my time putting query that, sir, where is this in the institute material? I don't know. But it is there. Definitely it is there. Don't worry about it. Okay. Because while I'm preparing this PowerPoint, I have thoroughly analyzed the institute material, extracted it. What I told, preparation of notes. I have done it. In a way, I have digested that institute material, prepared notes and given you in the form of PowerPoint. But I want you to go beyond that on your own, I want you to prepare one set of notes. That will be the ultimate preparation. Okay. Chalo. Now, what is the topic about? First of all, appointment. How are auditors appointed? Two categories of auditor. The first auditor, company's year of incorporation. As soon as the company is incorporated, it should have an auditor. Then subsequent auditors. Now I'm going to let you in on an important secret point here. Not a secret, it's a rule, you can say. The rule is no company shall be without an auditor at any point in time. Check out. See, company is born. Day one, it cannot have an auditor, but within 30 days, it should have an auditor. Or within the time prescribed, the board should appoint the first auditor. Otherwise, central government will appoint. Okay. Thereafter, at every AGM, you cannot remove an auditor so as to make the place vacant. If you are going to change the auditor, you have to put one more guy there. The auditor holds office. Note it, your honors, the auditor holds office till the conclusion of the annual general meeting. At every annual general meeting, at every 5th annual general meeting, because he'll be holding for 5 years, you have to reappoint him. So the auditor holds office from the first annual general meeting to this. The first auditor will hold office from 0 to first AGM. 0 to first AGM. First AGM May you will appoint the subsequent auditor. He will appoint him for 5 years. Correct. So he will hold office from the first AGM till the conclusion of the 6th AGM. Got it? 6th AGM. Now, before that AGM is over, you have to reappoint somebody. You have to either reappoint this guy or appoint somebody else. If you don't do it, he will continue. You can see that. Unless there are certain criteria, in which case central government will get the power to appoint. At no stage you can run free without an auditor. Auditor will always be breathing down your neck. Okay? We are the watchdogs. We are also the bloodhounds. We are always there. But ultimately we are dogs. But it's okay. We are here to bark. We are here to alert. We are here to bite also sometimes if necessary. Okay? So just because of 1 or 2 cases like Satyam, you cannot underestimate the independence and power of a profession. Okay? Of a trained profession and an experienced profession. Okay? See, I'll tell you, sometimes just the preliminary balance sheet comes to me. Just by looking at it over a period of say 1 hour, I will note down 15 questions or 20 questions. Those 20 questions will cover the audit. Focus of the audit. Otherwise, the audit program will be done and documentation. But these 15 questions will be enough for the essence of that. Why? I'm not boasting. And this is not something that only I can do. There are many professionals who can do. Okay. Some of you are asking doubts on other chapters. Let me see. At the end of the session, if I have time, about 137, I'm not aware now. Filing annual return, 137. Okay, I'll check if I can do it by the end of the session, because I saw the message only now in the query pad from Kevin Narona. We will do it. It's not a big deal. Okay. Filing of annual return. I'll check that. We'll do it. We'll do it. Okay. It's not a big deal. Fine. Then removal, resignation of auditor. Okay. See, you can remove a auditor, but you cannot remove the auditor. You can remove one man and put another man, but you cannot remove and say, we don't want auditor anymore. Not going to happen. See, sometimes people also, fellow professionals also derogatorily say, or even sometimes other professionals and public at large, they say, you chartered accountants are here only because of that section in the Companies Act. And but for that, you have no business to be here. Yeah, but believe me, those sections cannot be removed from the Companies Act. with that end of everything, chaos. I'm not. You think that we will lose our jobs? We can't practice after that? No. Seriously, even if there is no compulsory audit under the Companies Act, believe me, companies are going to come to us for advice because they need this profession to advise them on financial matters, to advise them. But what will be lost is that check and balance. Every company will provide the accounts what they think and whatever they want. Whatever they feel like, it will become accounts. Okay. And we will be doing something else. Okay. Some other activities. We got so many things we can do. We earn money. Okay. And but that's the end of corporate credibility. Okay. And corporate financial credibility. So even though derogatorily somebody may say, but for this section, you have no business. Without this section, you have no hope, is what I will tell. Okay. The Ministry of Corporate Affairs can do anything, but they cannot remove this chapter. They need us as much as, we need them or not. They need us. This profession is like doctors, yeah. You can't ban doctors, yeah, because they do a job, dirty job, but they do it. Lawyers, they do it. Without these professions, you cannot function as a society. Okay, no other go. Just because of section, we are not there. We are there because there's a need for that role. When public money is being handled by a few individuals, there is a need for a professional group who would be independent and who would assure you that everything is correct. This assurance, if you say you don't want it, that day you are inviting chaos into the financial markets. That day you are totally, that's it, you are destroying. Pralaya will come. So again, I challenge, this chapter cannot be removed. Okay. We can do something else. We got so many things in our talents in our packet. Chartered accountants. We can do 100. In fact, the same company will come to us for financial advice. They will say, sir, please, my accounts, have a look and tell me, sir. Even if there is no compulsory audit, kindly assure me, sir, whether my accounts team has done the correct job. Before I give to the bank, please assure me. So it will be voluntarily, they'll come to us and ask. Okay. Boards of directors will want it. And over a period of time, as fraudulent companies start providing false accounts without audit, the good companies will seriously say, our accounts are actually audited, yeah. We are having actually audited accounts. Though there is no compulsory audit, our accounts are being audited. They'll take pride in saying that. Sorry, I'm trying to give a scenario which is that, but seriously, sometimes, I get a little bugged when derogatory statements like that are made about the profession, saying, but for this section, you people have no job, like that. Yeah, but for us, this section will not be there. And your protection will not be there. Okay. Okay. So coming to the point, eligibility. These are thoughts from an old man with about 35 years of experience, okay, in the profession. I have signed, in a year, I signed about 200. That limit, whatever partner limit sign, I'm signing, yeah. Okay. And beyond that also for other small companies and all, I'm signing. Okay. So eligibility, qualification and disqualification. My God. More than qualification, which is only one, becoming a member of the Institute of Chartered Accountants of India, there are more disqualifications. We should see what they are. Very important. From exam point of view, disqualifications are very, very important. Okay. Disqualifications are very important. Remuneration, of course, we need to eat, survive, live, raise the family. We need something. Okay. Powers and duties of auditors and auditing standards. You see that. Certain prohibited. See, this is where section-wise prohibited services will be 144. I will cover this here. I will bring 144 here. Why? Because it is linked here. Like that, I will do things. So when you see me doing 144, you will see the disqualification 144 is not coming. You get angry. Where? Don't ask. It's there. Okay. Signing of audit reports. Okay. In fact, if I may add a small humorous aside here, when I was about 13 years old, 8th standard or something, I was not very keen on becoming CA. Honestly, I was in 8th standard and I was good at biology. My favorite subject was biology, zoology. And actually, I want to become a veterinary doctor, not even a regular doctor. I don't want to cure men. I want to cure animals. And so that was my passion. All that, Gerald Darrell and all that stuff. So the point I'm trying to make is somewhere down the line, James Herriot, Gerald Darrell and that. So the point is, so then one day, of course, better counsels provide, my father is a practicing CA. So in those some of the small and medium practitioners, they used to operate out of their house. So the house would be huge with two floors of family and one floor, the third floor with the separate steps from the outside will be my father's office. So we used in the evening after coming from school, we used to go there and just casually talk to the staff and all. They also know auditors, and so they come, they talk and all that. The point is, apprentices and all that, they'll be talking to me, all that. So the point I'm making is, one day my father was sitting in the cabin. Like he used to have a glass, where you can see what's happening inside. So I was seeing it, and I found that people are coming and bringing some books and all, and he's looking and some papers and all are being typed out and taken to him, and then he signs it. And then after signing everything is over, they shake hands and he gives the paper. They also I was shocked. I was feeling so, wow, this gentleman, my God, he's signing and earning money. This is what I want to do. Don't take me otherwise. Young boy, 13-year-old boy, what you will understand? You're all intermediate qualified, chartered accountant and all. And that was just a young boy. He doesn't understand anything. He thought, if I become chartered accountant, I can sign and get money. Because only after I came here, I understood. Before that signature, how much work is done. How much risk is taken. How much understanding of the business and financials have to be brought into play before we can sign that balance sheet. Okay. It's not an easy joke. I realized that, but by then it was too late. I got caught in the net. The only way out of that net is out this side, not that side. So once you are in, walk straight, keep on going. It's like a video game, level 1, level 2. Okay. Then level 3, like that. You have to keep on moving up. Auditor to attend AGM. Of course, this is the Companies Act. Don't forget that. Punishment. Every section will have punishment. Okay. Then finally, we'll see cost auditors. No. Who can be an auditor? As of now, no competition. Only member of the Institute of Chartered Accountants of India. That too, a member who is holding a certificate of practice. Okay. COP. Okay. Certificate of practice. Right. So, I have been holding my certificate of practice continuously since 1987. Almost after I qualified. In those days, no advanced MCS, GMCS and all that. You qualify, you become a member. That's all. Stay away. Qualify, you come to the institute, file the application, become a member, finish the articles, get the certificates for industrial training completion, article completion, blah, blah, blah. Everything, pay the fees, become a member, put AC after your name. They give you a number and they give you a certificate of membership and a certificate of apply also COP, they give you COP also. Okay. Certificate of practice. So COP. Okay. Now, who can be individual who is a member of ICAI can be a chartered an auditor. Also, a firm of chartered accountants. Okay, they are here. The Companies Act is saying majority of partners practicing in India are members of ICAI. So the Companies Act envisages multi-professional partnerships. But here also they are saying in that firm, the majority of partners practicing in India are members of ICAI. So you can have a CFA, you can have a CPA also, no problem, as a partner. But majority of them should be members in the ICAI, members of ICAI. Okay. Of course, our institute prohibits partnership with other professions. Only members of only CAs can be partners. Okay. But even if you have CPA, etc., the majority should be members of ICAI. The Institute of Chartered Accountants in India. CPA cannot sign a balance sheet in India. The certified public accountant from the United States cannot sign a balance sheet in India. Cannot. Unless he becomes a member of ICAI by writing the exams. Only partners who are CAs can sign on behalf of firm. So the idea is even a non-CA can be a partner as per the MCA. But our institute is still not permitting us to do it. Okay. I mean, this is not part of company law. That will come under the auditing web. What a chartered can do, cannot. Code of conduct. I don't know if it's there in an intermediate syllabus, but in final you'll have to study. Now, disqualification. A body corporate other than LLP registered under LLP Act. So, body corporate means mainly company cannot be a auditor. But exception is LLP. LLP is a firm. Basically, limited liability partnership is like a firm. So, LLP alone, though LLP is a body corporate. Under the Companies Act, LLP is a body corporate. Which is why in consolidated financial statements, even if you are an LLP, it has to be, and its LLP is having more than 51% in a company, that LLP balance sheet, this company has to be consolidated. That LLP balance sheet has to be consolidated, CFS, consolidated finance. I am signing for a couple of LLPs who are having majority stake in companies. Like that. Okay. Sometimes company will be holding majority, maybe a majority partner in LLP. Then also have to consolidate. So, body corporate other than LLP registered under LLP. So, a firm of chartered accountants, which is not a normal firm but an LLP, can be appointed as an auditor. But company cannot be appointed as an auditor. Right? See, what you should understand, even when I'm signing as I'm signing as a partner of a firm, but though I'm signing under the firm letterhead and firm thing, my membership number is very much there. Firm's FRN is there, my membership number is also there. So tomorrow anything, I as a partner, as a member of the institute, will have to stand before that is made on tape. So other partners, no, they have to go. Okay, because I sign, so I have to go as a member and answer. Firm also commonly will be liable. You'll see that when you come to punishment and all that. Lot of punishments for auditors. It's like Asidara Vridam. You have to walk on a blade. Razor's edge. You have to walk. Too many penalties. Too many. Even if caught, you're out. An officer or employee of the company cannot be an auditor. Obviously, the reason is because of independence. Yeah. All said and done, an employee, I mean, very difficult. You can say I'm independent, but still, okay, very difficult. So they don't want to take that risk. So an officer or employee of the company cannot be a auditor. A person who is a partner or is in employment with an officer or employee. See, Mr. A is the CFO of the company. He is also holding COP and he is a partner in a firm. He's just holding COP. He has taken permission from the company, part-time COP, and he is a partner. Okay, not wrong. It can be done. But Suppose in that firm there is another partner. That partner cannot sign. That partner cannot become an auditor. Got it? Nor, see, suppose this officer is having a proprietorship also. Anybody who is in employment with him now as a qualified assistant cannot become an auditor, cannot sign. Same logic. This is very, very important. Very, very important. Must be knowing it. If you don't know it, know it. If you know it, revise it. A person who or his relative or partner is, now read like this. A person who or his relative or partner is holding any security of or interest in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company. Okay. Please go and see the definition of holding in subsidiary companies. You'll be very surprised. For that purpose alone, they will include LLP. Normally, they'll say body corporate includes Indian company and foreign company incorporated in India. But here, for that purpose alone, they'll say body corporate. A company includes LLP. Normally, company means only Indian company. For purpose of holding and self-definition alone, they will include LLP also. Just check out. Okay. Holding, so a person who or his relative or partner is holding any security of or interest. So security means share or debenture or whatever. Either you can hold it in the company or its subsidiary or holding company or associate company or a subsidiary of the holding, co-subsidiary. So holding hai, I am there, another subsidiary hai na, co-subsidiary. There also you cannot hold. Auditor cannot hold. Relative cannot hold. Partner cannot hold. Partner of the auditor cannot hold. Also, a person who is or his relative or partner is. This is a common sentence. Read it with each one. A person who or his relative or partner is indebted for an amount in excess of 5 lakhs. So they've given you a limit of 5 lakhs. See, you want to take some advance, you want to take some money ahead, to 5 lakhs you can take. You or a relative or a partner. Beyond 5 lakhs, no. Or a person who or his relative or partner has provided guarantee or any security on behalf of any third person in excess of rupees 1 lakh. So once a guarantee is given by the auditor or his relative partner, what happens? Tomorrow, if the other party doesn't pay, I have to pay. Then I become indebted now. So they say no guarantee can be given in excess of 1 lakh on behalf of a third person. See, this will be very relevant for bank audits because if you are the auditor of a bank, even a branch auditor, this rule will apply to you. So in fact, before we accept the branch audit, we'll be asked to give a declaration that we are not holding any security indebted to the bank or even given a guarantee on behalf of the third person. Suppose auditor's son is going abroad, studying in Australia, borrowing 40 lakhs and use it for the MS or whatever, and then not get employment in Australia, come back to India. Nobody will hire him in India with disqualification. Definitely not at the salary he got in Australia. He doesn't know what to do. And already 40 lakhs spent, education loan taken, guarantee given. I mean, okay. Funny, no? Whereas the entire my CA studies, cost my father only 36,000 rupees. Only 36,000 rupees those days. And that also some portion of it from my industrial training stipend I paid. I think final exam fee and all I paid and final course entry, it's nothing. It doesn't become home. Okay. Books, I got a scholarship because I got all India rank in Inter. They gave me a scholarship for final. Book scholarship by which I could buy 50% discount. I could buy books. Textbooks. So like that. So what I'm trying to say, my dear friends, don't mistake me for saying this is a limit. Person who is or his relative or partner is holding any security indebted, be very careful. Relative may hold shares of face value not exceeding 1 lakh. Relative may hold. Relative may hold shares of face value not exceeding 1 lakh. Okay. Auditor cannot hold even sirf ek share he cannot hold. But relative can hold up to face value not exceeding 1 lakh. Note it, your honors, very, very important. Note it. Face value. What is the face value of 1 share of Reliance? 10 rupees. What is the market value of 1 share of Reliance? 1,200. So 1 lakh face value means how many shares? 10,000 shares. Got it? 10,000 shares of Reliance. What will be the cost? You have to calculate today's market price. So market value is not the criteria. Face value 1 lakh. Got it? Good. Let's see whether any doubts are there. Thank you, Mr. Anil. I've done my best to see one more thing, I have many things to thank Corona. I have to thank her. I assume that she's a lady because all, I mean, the female of the species is more deadly than the male. Rudyard Kipling. So Corona is definitely female. Okay. So the point I'm trying to make is she helped me, but she helped me to prepare these notes because I had absolute peace of mind sitting at home. Lot of, not even in Chennai. My daughter had given birth to a baby and Chennai was full Corona. So we rushed all the way and I stayed in my Sambandhi's house for 45 days. Shame. But he has a big bungalow in Coimbatore. He gave me one room and gave me place to prepare. Because he said, you're doing some education work, you do it. And I used to take classes also there. And my first online classes were taken in Coimbatore. Then, of course, I purchased my own house in Coimbatore and I moved there. Point I'm trying to make is, these notes were prepared then. I had a lot of free time to read the institute material, to read the section, understand, crunch it. And both for inter and final I created. And I took classes. So this is... See, in my humble view, Anil, I will not use the word dangerous at all. Well, they are also fellow professionals and you can also become a member of the IAA. IAA is a specialist organization. See, think about it this way. Suppose you're a doctor. You've done your MS, MBBS. Then you're doing an MS or an MD. IAA is like MD. It's a specialization area. Okay. The only problem is the route is not only CA. Even a cost accountant can come in, company secretary can come in. But CAA has its own curriculum. And you have to write that exam. So I look at CIA, CISA and all as advanced, shall we say, certifications, which are like, see, today, if somebody has completed MBS, Donkey also won't go near them. Seriously, MBBS, standalone MBBS, no joke. Yes, minimum MS or MD they have to do like that. So this is like that. So if you, for example, if you join a company as a chartered accountant, you join. You in internal audit, you grow in the hierarchy. As you grow in the hierarchy, you will realize it's better to also become a member of IAA and become a CIA. Automatically. I'm not a member because my core function is not internal audit. But if I decide to become an internal audit specialist, automatically I'll write the CIA and become IAA, member of IAA. So, IAA, Institute of Internal Auditors. Yeah, Indian Institute of Accountants. Oh, that is a different story, ma. I don't want to call. This is not the forum for that. IAA is run by the Ministry of Corporate Affairs. It's not okay. It is a good idea. I think it's a wonderful idea. Let's leave it at that. Okay. I thought you were talking about Institute of Internal Auditors, which is in my view, it's advanced, like beyond. See, for example, you're a chartered accountant, but you want to get into banking in a big way. Then a nice add-on is CFA, Certified Financial Analyst. So these are advanced qualifications, specialist qualifications. For example, I'm a CISA, Certified Information Systems Auditor. Okay, which means that helps me in my auditing function. And it enhances the value I can give to my clients. So it's like that. So, I mean, for example, doctor goes to Scotland, he does an MD. Why would he do that? Then when he comes back, he becomes gastroenterology specialist. Only gastroenterology. Like that. Okay. So that's what Indian Institute of Accountants, wait and watch. As you say, I will prefer not to use the word dangerous and all. Let us see where it's going, what it's doing. Okay, but let's keep watching and trying to find out what it's doing. I have some theories, cannot be shared in this forum. in the event of acquiring any security or interest by a, actually there should be an off there. In the event of acquiring of any security or, but in the section, somebody was hungry and ate the off. So in the event of acquiring any security or interest by a company, by a relative, above the threshold prescribed, the correct action to maintain the limits shall be taken by the auditor within 60 days. See, suppose unknowing to the auditor, brother has acquired shares. Then the company secretary informs the auditor, sir, your brother has acquired 1,50,000 face value shares, sir. So, you are given 60 days to go to your brother and tell him, boss, if you hold these shares, it will be a problem. What to do? What to do? Then you buy it in Bobby's name so that she is not my relative. Yeah, she's not. Brother's wife is not a relative. Check out. Okay. Brother is relative. Brother's wife is not a relative. Under the Companies Act. For IBBC, Insolvency Banking Code, she's a relative. But for Companies Act, sister, brother, that's all. Huh? Let's have a small break at this stage. I have quickly given the, see, you can see here also. This is the relative. Husband, wife, related, unfortunately. Members of HF related. These people are related. Other than this, no. Father, mother relative, sister, brother relative, that's all. Spouses, no. Son related, son's wife related. Daughter, daughter's husband. That's all. No son's son also. Earlier, you had son's son, son's wife, son's daughter's wife, like that. Daughter's son, daughter's daughter, daughter's son's wife, daughter's son's wife, daughter's husband. And brother's wife was also there, sister's husband was also there. Now that's not there. Brothers-in-law, not relative. Sisters-in-law, not relative. Are you able to understand? My wife's sister, she is not relative. My father-in-law, not a relative. Of course, he's no more. He's hopefully in heaven now. Okay. Swarg mein hai. But when he was alive, in the early stages of my marriage in 1992, I went to him and I showed him the then Schedule 1A of the Companies Act 1956. And I said, read this. So, list of relatives published by the Government of India. He was a policeman, CIB officer. He read it. What is this? So, this is the relative. Oh, father-in-law is not. Yes, you and I are not related. No. So, no one, I'm not a relative. But see, you are not my relative. But I am your relative. See, look at it. It so happens now I'm a father-in-law. Okay. So, my son-in-law is my relative. Got it? As if I am taken as the individual, my son-in-law is my relative. But if he is taken as individual, I am not his relative. Sorry, see, don't ask me all these things. Yeah. Huh? Anyway, be careful in the examination when relatives are mentioned. Try to visualize this and keep it in your mind and see whether this fellow comes there. In fact, in our institute exam, once in 188 section, they was blindly they've given brother-in-law. What type of those days? Sister's husband was related, brother's wife was not. My wife's brother was not related. Wife's brother not a relative, sister's husband relative. But now sister's husband also not a relative, wife's brother also not a relative. Okay, so brother-in-law not a relative, father-in-law not a relative. Be careful. Okay, let us have a small, shall we say, break for about maximum 10 minutes. Sir, small break, sir. Welcome back from your well-deserved break. So continuing with the disqualifications of auditor. So we saw about relative auditor or relative or his partner not holding shares or securities, not being indebted in excess of 5 lakhs, and not giving guarantee or providing any security in excess of rupees 1 lakh. See, this exemption to a relative is only for securities and that too shares. Whereas, only for shares. Here they use the word security. So this is only for shares. Okay. And also this other than that, there is no exemption. Even relative cannot be indebted for more than 5 lakhs. And even relative cannot give more than 1 lakh guarantee. Okay. Auditor cannot hold even one share, one security, whereas relatives can hold shares of face value not exceeding 1 lakh. Relative we have seen. Now we go to the next disqualification. A person or a firm who either, whether directly or indirectly, has business relationship with the company or its subsidiary or its holding or associate company or subsidiary company of such holding company, all the whole thing. Company, subsidiary, holding, associate, subsidiary of the holding or associate company. Okay. So it's like this. So all are covered. Just if I can see, I'll take this as company, then holding company, then subsidiary company, then any other subsidiary of the holding company, then associated company, subsidiary of the associated company. All are covered. Company, holding, subsidiary of that holding, associated company means this company is holding more than 20% in this company, and subsidiary of the associated. Okay, all are governed here. Okay. A person whose relative is a director, or so you cannot have a business relationship. Now, the word business relationship is defined here. The word business relationship shall be construed as any transaction entered into for a commercial purpose. So the person or a firm who either directly or indirectly has a business, so commercial purpose cannot be done. But commercial transactions which are in the nature of professional services permitted to be rendered by an auditor or audit firm under the Act and the rules of the regulations. Permitted. So 144, there are certain prohibited services. You cannot do that. But permitted. For example, tax audit is permitted. Tax advisory is permitted. You can be a tax advisor, nothing wrong. You can do tax audit, nothing wrong. But you cannot do internal audit and statutory audit. Straight away disqualified, because how can it be both? Yeah, not allowed, like that. Okay. And so I'll give you one more example. Some chartered accounting firms also have a small activity of placement services. For example, invariably when they come to you, the company also says, sir, can you also get us a good staff, say in accounting, especially accounts department. So many auditing, in those days, KPMG, Price Waterhouse, etc. had a placement service also. Very limited. So they will hire CFOs for you. They'll hire finance guys for you, or they will take over an assignment and they will give you employees on their roles. These employees will come and perform the job. Type of activities will be done. Or if you want people, they will supply people from their role, and their salary will be met by you, but we will bill you and take it, and we will pay the salary to them so that your headcount will not increase. So these type of activities are nature of commercial transactions. So a chartered accounting firm can render these services, but it cannot be done when you are the statutory auditor to that company. Because that would, suppose in a year, I'm doing easily 3 or 4 placements for you. I'm getting something like 25 lakhs, 30 lakhs billing from that. Now, how can I straight away, let go? So if I'm also a statutory auditor, you might ask me, why is all this so elaborate disqualification? Because forget Satyam. Before Satyam, there was another great thing called Enron. Enron, ENRON, Enron company, which was an energy company into projects and all that. Now, Enron was audited by a firm called Arthur Andersen. I don't know if you know if Arthur Andersen existed. No, many of you may not even know. Once upon a time, it was not Big Four. It was Big Eight. I'm not joking. With Pete Marvick Mitchell, Arthur Andersen, PricewaterhouseCoopers Lebrun, and then you, of course, you have Touche Ross and Deloitte and KPMG, of course, and your EY. So you had a constraint, you had eight of them. Then Pete Marvick Mitchell got swallowed. Arthur Andersen got destroyed. EY swallowed. And the consulting division of Arthur Andersen became what you know call Accenture. And then, of course, Deloitte continued. They swallowed Touche Ross and Deloitte. Siskin continues. Pricewaterhouse, of course, Coopers and Pricewaterhouse merged. So when all the dust settled, you had only four. KPMG, Ernst & Young, Deloitte, and now joined by Grant Thornton. Though nobody gives them the respect of Big Five, still, why not Big Five is always the question I used to ask. Okay, why not GT should be given that respect of Big Five? You may include them in the list. But somehow they are still yet to get into that list. It is still Big Four only. Okay. The point I'm making is Arthur Andersen was a big six company at that time. It was Big Six. And because at the time Coopers was there. Okay. So Big Six. And in the Big Six, Arthur Andersen did one important mistake. What was that? They had a consulting division and an audit division in the same firm. Consulting was more engineering consulting. Forget, not financial consulting. They were into project consulting. In fact, Arthur Andersen, the firm, hired more engineers than chartered accountants, CPAs. That used to be a running joke that the CPAs were running an engineering company. Because the engineering company, but the partners would run. The engineers would be employees. None of them can ever become a partner. Okay. Whereas the partners would be only CPAs. So that was how it was. So Arthur Andersen was getting huge consulting income from Enron. So when Enron had certain financial problems, the CEO of Enron arm twisted Arthur Andersen partners and said, you have to sign. If you don't sign, if you don't help me, I will remove your consulting business. So this is where the independence is lost. So post Enron, when our new law came, they clearly said no business relationship. And 144 also is one such section. You won't find an equivalent of 144 in the 56 Act. It was left to the auditor's conscience to decide whether his independence was satisfied or not. Now we don't trust you. My conscience, nobody trusts. They say clearly you can't do this. Okay. A person whose relative is a direct. So this is why this business relationship. Also, commercial transactions which are in the ordinary course of business of the company, arm's length price, like sale of products or services to the auditor, etc., etc. Okay. In the business of telecommunication, airline, hospital, such other similar businesses. See, let us say that for example, to my knowledge, EY is the auditor for KP. Yeah, EY is the auditor for SpiceJet. Whatever, doesn't matter. The point is, so they will also book tickets now. How can you say I cannot book airline tickets? Yeah. So if the sale of tickets is happening to me at the same price as at the disinterested third party, then arm's length. I can as well do it. Telecom, see, you may be Airtel auditor, but you will have to use Airtel services. You may be Apollo auditor, but you have to get admitted now. When the work pressure becomes very high, partner has to go for hospital only. Which hospital? Same hospital. They treat you well because you're auditor, but financially no benefit. The rate they charge should be the arm's length rate. Hotel, I can give you examples. So similar businesses. Okay. I always have a doubt. See, suppose you are auditor for Maruti Suzuki. Can you not buy a Maruti car? I think he can, provided it is done in the ordinary course of business. Okay? In the ordinary course of business. Okay? I don't know why they include this business of telecommunication, airline, hospital, hotels. No, the bigger question will be whether such other businesses, similar is the general statement, following a set of, specific statements. Okay. It's a classic where whether I can include other than some other totally unconnected business. It's a moot question. If you ask me, I would say we can read it ejusdem generis. I mean, we need not read it ejusdem generis. It can be given wider impact. But anyway, when you come to final, that will be one topic you will study in your self-paced model. On your own, you will study the interpretation of statutes, including ejusdem generis. A person, I'm sorry, we missed this. A person whose relative is a director or is in the employment of the company as a director or key managerial personnel. By now, your studies of preliminary definitions, you should know who are all key managerial personnel. Am I correct? Whole-time director, MD, whole-time director, CFO, company secretary, CEO, and any other person designated as a key managerial person. So these are all key KMP, key managerial personnel. Okay. In some sections, KMPs are made liable. We saw that now in accounts. Non-their KMPs become liable. So KMP, a KM relative, a person whose relative is a director or is in the employment of the company as a director or key managerial person. Cannot be, especially KMP. Okay. I'll give an example for that. It will be very easy. A person who is in full-time employment elsewhere. So, a person who is in full-time employment cannot become a chartered auditor of a company. Sorry, he cannot sign a balance sheet. So, many people in full-time employment, they will be holding COP. They can hold it. Okay, nothing wrong, but no big use. Okay, they can say they have been holding companies. See, I spent about 3 years with Pricewaterhouse in the beginning of my career. When I just qualified, I joined Pricewaterhouse as junior officer, spent about 2.5, I think about 3 years there. At that time, I was in full-time employment with Pricewaterhouse. Actually, not Pricewaterhouse. I was with Jokshibargo, technically Pricewaterhouse. And but I was still holding my COP with the permission of the firm because I wanted continuous COP from day one. I didn't want to surrender my COP. So they allowed me, but of no use. Just I pay the COP fees and keep it. That's all. Okay. Of course, that also meant the firm could hire a article clerk in my name. So my holding COP. Okay. Not that they did, but they can. A person or a partner of a firm holding appointment as its auditor, if such person or persons or partner is at the date of such appointment or reappointment holding so this 20 company is a ceiling. Okay. So if you are an individual practitioner, you cannot be auditor for more than 20 companies. Right? If it's a firm, then multiply by 20. Suppose there are 3 partners, 60. 3 into 20, 60. But some companies are luckily avoided. In the case of private companies, 1-person company is not counted. Dormant company is not counted. Small company is not counted. Private company having paid up share capital less than 100 crore. This will exempt most private companies. Rarely you'll find a private company having paid up capital more than 100 crores. We're having only two cases like that. In our entire firm, we have only 2 private companies, paid up share capital more than 100 crore. Okay, they're big companies. Turnover is 1,000 crore. Okay, such companies. So they are technically public companies. In fact, we even suggest you become public company. They don't want to be for convenience sake. Okay. So in case of private companies, the following are excluded. Please remember, for counting 20 companies, don't include OPC, don't include dormant, don't include small company, which will exempt many people. Many guys will go out of small because of small company. And private company having paid up share capital less than 100. If I exclude all that, the remaining number should not be more than 20 per partner. Or if it's an individual, 20. Suppose you are holding more than 20, then you are disqualified. Suppose I'm already holding 20. When I get appointed in the 21st company, out, disqualified. Okay. A person who has been convicted by a court. See, the idea of this 20 ceiling is because of constant focus. So suppose I am able to do good PD, business development, and I'm able to get 100 companies. I should be able to execute the audits. Huh? If I have enough partners, I can do that. But if I don't have that many partners, then I have to expand. I have to add more partners. so that these partners can handle the excess companies. One partner maximum can handle only 20 companies, of which these private companies are exempt. Okay. I'll finish this and then I will see the query pad also. In case you're putting up your queries in the query pad, I will see it. Okay, so a person who has been convicted by a court of an offense involving fraud in the period of 10 years does not elapse from the date of such conviction. Okay, think about it. Fraud, chartered accountant. My God. Seriously, friends, it's not worth it. You want to become a member of our institute? Please, highest level of ethics, highest level of moral standards. Please, don't think qualifying the exam is only brain. It is also a sense of discipline, a sense of ethics. Please, man talking to you is an all India rank holder in inter and final. Okay, but that is not why I am proud to be a chartered. Brain is only half of it. Ethics, more important. Okay. See, Aketan Parekh cheating the market, destroying people's life. However intelligent he is, sorry. Okay, it's not worth. And Nirav Modi, however intelligent he is, it's not worth. Ultimate, the great, the bull, big bull, Harshad Mehta. What is the use of all your intelligence if you are unethical and fraud? A person who directly or indirectly renders any service referred to in section 144, we already saw now. So if you are rendering any service of 144, you are disqualified. So you have a choice. Stop rendering that service, become auditor. Or render that service, don't become auditor. Remember, my dear friends, these are all disqualification. We are considering the appointment of that person. He should not be suffering from these disqualifications. So if a firm of CA is already rendering a service referred to in 144, they cannot be appointed as auditor. See, sometimes we have a consulting division also. I'm doing consulting work. I myself will never want to become auditor there because my consulting income is much more. Yeah, why I will become auditor and lose the consulting business and get audit, which I don't want. So I will never. Sometimes in some companies, I take a 5-year consulting assignment. I'm very happy, lucrative. I will not touch the audit. Then please, sir, take somebody else. I don't want. If a person appointed as an auditor of a company incurs any of the disqualification, he shall be deemed to have vacated his office. Vacated. And this will be deemed to be a casual vacancy. What will happen if it's a casual vacancy? We will see. Casual vacancy other than resignation, board can appoint, replace, other than resignation. Okay. So this, in this case, disqualification will become a casual vacancy. We will see when we come to vacancy, casual vacancy, we will see. But in casual vacancy, there are two types. By resignation of CA, not resignation. This will come into not resignation bed. Now let's look at some test questions, which have been asked in the examination in the past. One is my own, not example. CA Vikas is appointed as auditor of ABC Limited on 17/7/2019. On 15/4/2020, his brother is appointed as non-executive director on the board of ABC Limited. What are the consequences? So on 17/7/2019, on 15/4/2020, his brother is appointed as non-executive director. So, am I correct? Director, a person whose relative is a director, or is in the employment of the company as key manager, director or key manager personnel. Here, non-executive director is covered. So, on 15/4/2020, CA Vikas will vacate office. Casual vacancy. Okay. Mr. Ram, brother of CA Sham, a practicing chartered accountant, acquired securities of Mr. COL Limited, having market value of 1,20,000, face value 95,000. Is Sham qualified? Yes, he is. Because market value should not be considered. Face value only should be considered, which is less than 1 lakh. Suppose it is exactly 1 lakh. Even then, no disqualification. 1,05,000 face value disqualified. Okay, let us see. Okay. So, yes, he is 95,000. Shabgupta wants to define point H. Point H. Madam, point H you will understand better when I also teach you 144. See, section 144 gives a list of services that cannot be performed by a statutory auditor to the company. If you are the statutory auditor, you also cannot perform 144 services. Got it? So during the year, your auditor, you are now being told to take up another work, assignment. It comes under 144, not allowed, prohibited. Now, another situation. You are doing something which is coming under 144. You are not the statutory auditor, so you can do it. So you're doing it. Now, they want to appoint you a statutory auditor. They cannot because you're disqualified. Because you're a person who directly or indirectly renders any service referred to in section 144 to the company or its holding company or its subsidiary company. So this service may be rendered either to this company or to its holding company or to its subsidiary. Okay. I hope I have explained to you. Become somewhat clear. 144 list of services in today's class itself, I'll cover it if possible. This is the ultimate prem ki kahani. Let's seriously, it's a beautiful story. Even if forget the company law and boring aspect, look at this story. CA Anil was appointed as auditor of DEF Limited on 39/2019. At that time, no problem. Anil is auditing DEF Limited. While conducting the audit, he met CS Neha, company secretary of the company. They fell in love with each other. What is the danger? On 15/1/2020, my God, Mr. Anil, what are the consequences of this vis-a-vis the continuance of the Anil as auditor? I'm sure they should have thought about it before getting married. Yeah. Neha should have resigned. Then, no problem. But Neha will tell, why I should resign? Because you are becoming auditor. You resign as auditor. So, even before marriage, they will divorce on account of this issue. Anyway, but let us hope that Anil is sacrificing he has sacrificed now. Because on 15/1/2020, when he married Neha, he is disqualified to be an auditor of DEF Limited. Why? Because his relative is a key managerial personnel. Correct? On the date of marriage, she becomes wife, yeah. To that time, she was a company secretary of DEF Limited. But on 15/1/2020, she became wife, relative. She is also KMP of DEF. On that day, you are disqualified. Better method would be intelligently what you would have done. You would have resigned and then married her so that the new auditor can be appointed and all. Anyway, see, he meets a wife but loses the audit. Okay. No. If he is disqualified, why resign? But thereafter, it's automatic casual vacancy. But if he resigns, it will be a good courtesy. Go and meet the MD, inform him about that you are marrying your company. So that I don't know. I mean, life. Huh? Welcome to life. Life interrupts your dreams and gives a reality check. Examine whether the following persons are eligible for being appointed. See, most of the questions are variations of the same theme, either relative or holding security, 1 lakh, like that. Mr. Prakash is a practicing chartered accountant, and Mr. Akash, who is a relative of Mr. Prakash, is holding securities, having face value of 70,000. Market value 1,10,000. Don't worry about market value. Face value only. Can Prakash be appointed? Yes. Here they say relative. So we presume that's in relationship. under the Companies Act. Please, in the answer, it will be good if you write one point. He said, it is presumed that Mr. Prakash and Mr. Akash is a relative of Mr. Prakash within the meaning of the Companies Act 2013. Safety. Okay. Mr. Ramesh is a practicing chartered accountant, indebted to MNP Limited for 6 lakhs. Sorry, cannot be appointed because the limit is 5 lakhs. Mrs. KVJ, spouse of Mr. Kumar, a chartered accountant, is the storekeeper of PRC Limited. Directors of PRC Limited want to appoint Mr. Kumar as an auditor. Can they do that? I am waiting for your answer for 3. I want your answer for 3. More than anything else, I want for 3. Madam, exactly. Jayendra Pokale has the answer correctly. They can appoint because she is not a KMP. Okay, Jolly Kumar also has got the same correct answer. Can appoint. Okay, merely being employee is not enough. Should be a key managerial persona. Whereas storekeeper is not a key managerial persona. Merely employee is not covered. Okay. See, employee of the company cannot be an auditor. Please don't confuse. Employee of company cannot be appointed auditor. Here we are not appointing Mrs. Kumar. We are appointing Kumar. No, Kumar's relative should not be a key managerial person. Mrs. Kumar is not a key managerial person. So Mr. Kumar can be appointed. Please understand. Don't get confused. Employee cannot become an auditor. Suppose Mr. Kumar is an employee of this company. He cannot be. But Mrs. Kumar is an employee. She is not a key managerial person. Therefore, Kumar can be appointed as an auditor. We come to 144. Wow. See, these services are prohibited to be offered by a person who is the auditor. Friends, please understand. If you are a firm of chartered accountants, you are an individual practitioner, you can perform these services. But if you cannot perform these services to the company where you are statutory auditor. If your firm is statutory auditor, to that company, you cannot offer any of the following services, whether directly or indirectly. What are they? Accounting and bookkeeping services. Okay. Internal audit. Okay. I have overcome this in one method. Because many SMEs, they come. These people are unable to appoint a good accounting team. Early stage SMEs, up to easily 25-30 crores, they are not able to get quick sales. So they have a core accounting team which will do day-to-day work. But when it comes to collating GST, TDS, total accounts preparation and all, unfortunately, the education system in this country is providing people who are called BCom with a piece of paper that says they are qualified, but they don't know the knowledge. So they don't have. So, yeah, you can perform this accounting and bookkeeping services. You can have a select. We have a division that does it, but not in the firm. It's a separate company, a firm that does it. Pink Panda Solutions, separate. No connection. I don't know who they are. They will do. So if at all they want accounting, go to Pink Panda. That's all, matter over. Okay. I don't know who is Pink Panda. No relative is partner there. No relative. Be careful. Relative definition is a dangerous definition. Who is not my relative? Check out. All the in-laws are outlaws. Okay. So, accounting and bookkeeping services. Internal audit. Statutory auditor cannot become internal auditor. This is, even without the 144 prohibition, our institute itself has told very clearly you cannot be. Our institute guidance note is very clear. It's a clear example of independence violation. Accounting also. Our institute doesn't allow. design and implementation of any financial information system, ERP and all that. See, I used to do that for many companies, but even when this section was not there in those days, I never used to be the statutory auditor for those companies. For many reasons, because when I am implementing the financial information system, no, it's a headache if I'm also the auditor. Better somebody else does it. So that he will give a different perspective and he'll give inputs that are valuable to me in my design, which as an auditor, I will not take into account. So better somebody else gives that in. Actuarial services rarely done by CA firms, but if they have a qualified partner who can do it, then also such services cannot be rendered to an auditing company. Investment advisory services, not possible. Investment banking, for example, they want you to become a consultant for taking the company to the IPO or first level funding. Sorry, you can do it, but then you cannot be statutory auditor. You can't do both. Don't do what Arthur Anderson did and many of the people are doing. Don't try to milk the same cow on everything. Okay. See, even big firms, they also know how to take it out, but arm's length. You can't do it directly or indirectly. When we come to directly or indirectly, you will understand. They have defined it for you. Rendering of outsourced financial services. I told you, na, where you send employees to do it. Management services. Hiring of, I told you, na, hiring of personnel and all that. That comes under management services. Okay. Any other kind of services as may be prescribed, not yet prescribed anything. Okay. These services shall not be offered by an auditor to the company where he is the auditor or its holding or subsidiary. Directly or indirectly. Directly, if it's an individual, he himself cannot do, relative cannot do, other person connected or associated with such individual cannot do. Associated, okay, with such individual cannot do. Entity in which such individual has significant influence or control cannot do. Entity whose name or trademark or brand is used by such individual cannot do. See, many times, I told you now, I was with Choksi, but basically Pricewaterhouse brand is being used. Trademark is being used. So that entity also cannot do. Now, earlier it was not there. Now it's there. In case of an auditor being a firm, the firm cannot do, partners of the firm cannot do, parent firm cannot do, subsidiary firm. See, there are 8 partners in the main firm or 15 partners in the main firm. Out of that, you take 5 and put them in a subsidiary firm. That's called subsidiary firm. So subsidiary firm becomes auditor, then parent firm cannot do these services. If the parent firm is the auditor, subsidiary cannot do. Okay. Associate entity of firm, okay, where common partners are there. Entity in which the firm has significant influence. Entity in which any partner of the firm has significant influence or control. That is, suppose there's an LLP in which one of the partners of this firm is having 51% profit share, or he is controlling, managing partner, then designated partner, then significant influence. Or private company where he is the director MD. Entity whose name or trademark or brand is used by the firm or any of its partners. So this brand misuse is common in large firms where they all come under that banner, but for liability alone, they will say, not my firm, not connected. I don't know who that boy is. See, they all go to do stealing work. But then when they escape, one fellow gets caught, immediately they'll all say, we don't know who that fellow is. We are not involved. If you think there's some robbery, that fellow you catch, put him in jail, not me. This is what happened in Pricewaterhouse case. You don't believe me, Satyam scam, what all Pricewaterhouse did, you don't believe me. You read the newspaper reports at that time, financial reports at that time. You will see how they were hiding behind names and saying we are not responsible. The firm which did was not Pricewaterhouse with them. I mean, this is not an open, I'm not telling something. It's an open secret. Open data. It's available to you. You can go and see. So, we notice one thing. For a firm, partners are given. Relatives of partners are not given. Do you notice that? Here, self-relatives are there. Here, firm hai, partners hai. Relative of partner is not here. Just keep that in mind. Okay, I would rather stop here and see, there are some questions that you have asked me. Asta is asking, when we have to sign board report, then if chairperson is not authorized, and we must have MD because it's not been specified in that para, that's an option to have MD out of. Let me check up. Let me see, instead of trying to answer from memory, let me check up. Let me stop here with auditors and open accounts and come to the appropriate slide. Board report, signing of board report. No. So what is your doubt, Astaji? When we have to sign board report, if chairperson is not authorized, okay, we must have MD because it is not been specified in that para that it's an option to have MD out. It is there. 2 directors, out of which one shall be MD if any. Would you like to verify 134.6? To my knowledge, if chairperson is not authorized in signing, then minimum 2 directors should sign. If there is an MD, MD should sign. But if the company does not have an MD, no need. But if there is an MD should sign. This is my humble view. If you have doubts, you can check up. 134 subsection 6, right? Dividend chapter, I have one doubt. See, very simple. Dividend, I'll quickly explain. Suppose I cannot declare dividend on accumulated reserve. The rate cannot be more than the average of the last 3 years. Now they are saying, in case you have not declared a dividend in any of those 3 years, that condition will not apply. That's all. If company not declare dividend even in one of the preceding 3 years, the company should not be correct. See, we can say 1, 2, 3. Even if you are not declaring 1, 2, because see, if you have not, how should I calculate the average? Yeah, I gave you the formula na, when I taught RD1 plus RD2 plus RD3. Now by 3. Now suppose you are not declared here, you put 0 here now. So this will become by total by 3. That say no. The minute he has not declared dividend in any of the one of the 3 years, then condition 1 will not apply. That's all. Your understanding is correct. So I hope I have clarified it for you also. Okay. Similar condition is not there for interim dividend. When you are not having profit in the last quarter, you know there is an interim. There they don't give this condition. So in which case you have to use only the formula I am using here. 137. Filing of annual return. Sir, 137 is about financial statement, sir. It's not about filing annual. 94 is filing annual report, in my knowledge. The Equipment Management and Administration. 137, this is the summary. Do one thing. Today it's a little too late. Maybe in the next class, I will take 137. 137 is a very simple section. Okay. This is all. This slide is 137. Over. Okay. We will teach it. Next class, I will start with this and then I will move on. Okay, because if I start now and you have doubts now, we don't have time to clarify. Okay, don't worry. We will take it up. In the next class, we will finish this 137 and we will then take up appointment of auditors, etc., etc., etc. Okay. Right, sir? Thank you. See you all in the next class. Bye. Yes, sir.